If you're receiving Social Security benefits, what I'm about to tell you could save you thousands of dollars on your taxes. But there's a catch that nobody's talking about. In the next few minutes, I'll break down the brand new tax deduction that 88% of seniors will benefit from, explain exactly when your July payments are arriving, and reveal the hidden cost of these changes that could affect your future benefits. Welcome to Financial Area, where we decode complex financial news into actionable insights you can use. If this information helps you, hit that like button and subscribe for more money-saving tips that actually matter. Let's start with what's happening right now with your July Social Security payments. The timing of when you receive your money depends on what type of benefits you get and when you were born. If you're receiving SSI or Supplemental Security Income, your payment should have already arrived on July 1st. That's because SSI payments always come on the first of the month, and if that falls on a weekend or holiday, they send it earlier. Now, if you're getting both SSI and regular Social Security, or if your Social Security benefits started before May 1997, your regular check arrived on July 3rd. But for everyone else whose benefits started after May 1997, your payment date depends on your birthday. If you were born between the 1st and 10th of any month, your payment came on July 9th. Born between the 11th and 20th, your money arrived on July 16th. And if your birthday falls between the 21st and 31st, you'll get your payment on July 23rd. Here's a pro tip. If you have direct deposit set up, your money usually hits your account early in the morning, sometimes before you even wake up. But if you're still getting paper checks, give it extra time for the mail to arrive, and always make sure your address and bank information are current with Social Security. Now let's talk about this new law that's been making headlines. You've probably seen stories claiming that President Trump signed a bill that means no more tax on your Social Security. But here's what's really happening and why the headlines got it wrong. The new law introduces a tax deduction specifically for Social Security recipients. If you're single and over 65, you can now deduct $6,000 from your taxable income. If you're married and both over 65, you can deduct $12,000. This is completely separate from your standard deduction, so it's additional money you can subtract from your income before calculating what you owe in taxes. But here's the crucial part that many people are missing. Your monthly Social Security payment is not changing. You're not going to see an extra penny in your direct deposit or your paper check. The impact of this new law will only show up when you file your taxes next year. That's when this deduction could reduce what you owe, or even move you out of the taxable range entirely. According to early estimates, about 88% of seniors will now either pay nothing or much less in federal tax on their Social Security benefits. This is huge relief for people living on fixed incomes, where every dollar counts. But it's important to understand that the underlying formula that determines whether your benefits are taxable hasn't changed at all. The new deduction simply lowers your overall income on paper, making it less likely you'll hit the threshold where your benefits become taxable. However, if you have additional income from retirement accounts, pensions, or part-time work, you could still end up owing taxes on your Social Security. The deduction helps, but it doesn't eliminate taxes for everyone. Now, here's the catch that most news coverage isn't mentioning, and it's something you need to understand. This tax relief comes with a significant trade-off. By reducing the amount of taxes collected on Social Security benefits, the Social Security Trust Fund is projected to run out of money sooner. The Congressional Budget Office now estimates that insolvency will occur in 2032, which is a full year earlier than previously expected. Former Treasury Secretary Larry Summers compared this change to poking new holes in a bucket that's already leaking. And he's not wrong. While this tax relief is great news for current beneficiaries, it raises serious questions about the program's long-term sustainability. For now, this doesn't affect your monthly benefit or the immediate stability of the program, but it does mean that policymakers will need to make some tough choices in the coming years to keep Social Security strong for future generations. Speaking of problems you need to know about, let's talk about Social Security overpayments. Earlier this year, the Social Security Administration faced a firestorm of criticism for aggressively going after overpayments, sometimes taking back entire monthly checks with little warning. After public backlash, they revised their policy. The new rule is that if you're flagged for an overpayment, the SSA cannot take more than 50% of your monthly benefit unless you specifically allow them to take more. This is a significant improvement from the previous policy where they could take your entire check, but it's still a stressful situation if you're affected. If you receive a letter about an overpayment, Here's what you need to do. First, don't ignore it. This is the biggest mistake people make. You have options, but only if you act quickly. You can appeal the overpayment if you believe it's incorrect. You can request a waiver, where in some cases you may not have to repay the amount at all. You can set up a payment plan to make repayment more manageable, or you can request a lower monthly deduction. The sooner you respond, the better your options will be. Another ongoing issue you should be aware of is the significant delays at Social Security offices. Many recipients are reporting wait times of over a month just to get a callback. This is due to ongoing staff shortages and the rollout of new artificial intelligence systems under the Department of Government Efficiency, or DOGE. While the SSA says new technology will eventually speed things up, the current experience varies widely depending on where you live. If you're dealing with these delays, here's what you can do. First, use your My Social Security account online whenever possible. It's often the fastest way to check your status, especially while field offices are understaffed. Make sure your contact information is current to avoid missed communications, and be patient but persistent. If you're stuck on hold, or waiting for a response, keep trying and document your attempts. There's also a new rule that caught some people off guard. If you're applying for retirement or survivor benefits in person, not online, you may be asked to verify your identity with additional steps. This rule started in April and is part of a broader fraud prevention effort. It doesn't apply to Medicare or disability applicants, but it has surprised some people who weren't prepared for the extra documentation requirements. Now let's talk about what you should actually do with all this information. If you're expecting a payment later in July, double-check your payment date and monitor your bank account or mailbox. With all the changes happening at Social Security, it's worth keeping a closer eye on things. For the new tax deduction, remember that your monthly payment hasn't changed, but this deduction could significantly reduce what you owe at tax time. If you're unsure how this will affect your specific situation, especially if you have other sources of income, consider consulting a tax professional when you're preparing your return next year. If you receive any letters from the SSA about overpayments, don't ignore them. Explore your options for appeal, waiver, or a payment plan. The worst thing you can do is stick your head in the sand and hope it goes away. With the ongoing delays at Social Security offices, the My Social Security online portal is often your best bet for checking your status. If you haven't set up your account yet, now's a good time to do it. And if you're planning to apply for benefits in person, bring all necessary identification and documentation because you might face additional verification steps. Here's something worth celebrating. If you were born in 1960, this is a milestone year for you. You officially reach full retirement age at 67, which means you can now claim your Social Security benefits with no reductions. You can still choose to wait longer to increase your monthly amount, but 67 is now your full benefit age. Congratulations to everyone reaching this important milestone. The key takeaway here is that while the new tax deduction is genuinely good news for most Social Security recipients, it's not the complete elimination of taxes that some headlines suggested. It's a significant help, but it comes with long-term costs to the program's sustainability. Your monthly payments aren't changing, but what you owe at tax time may be much less. Stay informed about these changes because Social Security rules and procedures can shift quickly. Keep your documents handy, monitor your accounts, and don't hesitate to seek help if you need it. The more you understand about these changes, the better prepared you'll be for whatever comes next. If this breakdown helped you understand what's really happening with Social Security, hit that like button and subscribe to Financial Area for more no-nonsense analysis of the financial news that actually affects your wallet. And drop a comment below if you've experienced any of these changes firsthand. Your real-world experience could help other viewers navigate these complex systems. Remember, you're not alone in trying to figure all this out. We're here to help you cut through the noise and understand what really matters for your financial future.